Hi again everyone, I hope you're all doing really well. So this video is a follow-up from my recent video regarding the $25 Xela note that stockholders can exchange their stock for as part of the company stock buyback. Since that video, which was fairly well received, I have had several comments asking about what I think regarding the $50 Wall Street bet price target push for the stock. When you consider that Xela stock is currently trading below $1 per share, it's hard to imagine it getting that high. But if a concerted and sustained effort is brought to the stock by Wall Street bets and the broader retail scene, I think there is still a scenario where this could potentially happen. As such, this is what I want to cover in this video. So I'll look at how I think the rally to $50 mechanically can occur, and I will discuss my thoughts on whether or not this will happen in my mind. So let's get into it. So as with many Wall Street bets plays, we need to appreciate the shorts scenario for Exela Technologies. Currently, Xela does not appear on the Fintel short squeeze list, which is not surprising given that only 2.74% of the float is currently shorted and there is a low borrow fee of 2.28%. So really at the moment there is no financial pressure on shorts to cover their positions. However, it is important to realize that the percentage of float shorted is not updated daily. It is a figure that is updated about twice a month, and this will become important later on and I'll explain why. One bit of Exela shorts data that is interesting is that we are seeing the average days to cover is actually quite low at 0.09 days. And this is perhaps best explained by the fact that as the stock has started to rally following the announcement of the stock buyback, the ability to cover shorts in a profitable way has diminished, leading to short traders needing to hold out and wait and hope for a change in fortunes. You have to remember that Xela is bouncing back in the face of wider poor market sentiment, so we are seeing a small number of short sellers feeling a tiny pinch in what otherwise has been a fairly green time for people who trade shorts. One thing that really makes this $50 price target a little bit more interesting is the fact that the current shorts volume is over 50% as of last Friday. And if we look back at all the recent trading data, this high shorts volume above 50% has actually continued for quite some time now, basically since the stock buyback was announced. What this means, when you have a rising stock price and a sustained shorts volume ratio above 50%, this means that the overall outstanding shorts interest is going to be rising. If you also factor in, since the announcement, that trading volumes have been significantly higher than they have been previously, the overall number of shorts outstanding are probably growing faster than people realize. However, we are yet to see an updated number to officially determine this. So where things really do start to get interesting with this play is the buyback. So Xela is willing to buy back via issuing of tradable notes up to 100 million shares. As of September quarter, Xela had over 166 million shares publicly floated. This means if the buyback is fully prescribed to, this would reduce the Xela float by 60%. However, it would seem that Xela is only expecting to see this total reduced by 29%. Anyway, financially, the stock buyback does not change the fundamental shape of the company, except that they will have more interest obligations of 6% each year for whatever shares they retire. However, whatever shares do remain with Xela will receive a boost in the underlying assets they own, as well as the debt associated with those stocks. Overall, though this kind of deal will likely boost the perceived underlying value of the remaining shares, therefore making them more attractive and cost more, the event will put more pressure on shorts, as investors in the company will be expecting greater share prices, and with somewhere between 29 and 60% less shares available, covering short positions will become a lot more difficult. Hence why we can potentially get the momentum of growth that a short squeeze rally can bring, and this is how I see a run to $50 happening if it can at all. Obviously, the key date to watch for is February 24th and any announcements that comes around then regarding the extent of the buyback scheme. So clearly the potential $50 stock rally does face a number of hurdles. The first is that the share buyback has positioned shareholders looking to convert their stock to notes in a blind position, as we do not know what the latest numbers from the company look like. There is talk that Xela has made great progress in tidying up their books recently through a deal with B. Riley Capital. However, the market is still waiting on the 2021 Q4 results to confirm any of this repair. It has been no secret that Xela has had a long-standing debt problem. Therefore, people looking to participate in this note scheme or share buyback are not really going to know the financial position of the company until a little bit later on, hence leaving investors a little bit blind on this one. Next, given that a move to $50 will rely on some sort of short squeeze action, it is worth noting that much of Xela's float is held by retailers, particularly due to the current small market cap of the business. This means that there are largely absent passive institutional holdings which would diamond hand the stock through any major rally that happens, which would add pressure to shorts needing to cover. So the rally is going to be very much powered by the more fickle retail investing scene. The final point I would make is that $50 is a long way off the current stock level, so it would be a mammoth rally if it were to get that high. While generally pundits are becoming increasingly optimistic about Xela and the future potential the business has, particularly since recovering from their debt problem, most people covering the stock do see it as undervalued and are targeting somewhere between $3 and $4 over the next 12 months. So $50 seems a long way off those figures. Even in 2021's short squeeze rally, they could only get the stock to as high as $5. So 10xing that price point seems quite optimistic at this stage. That's not to say the potential to go beyond $5 this time around is not there, especially if the retail scene can get excited about this play. However, at this stage, Xela is not really breaking into the most talked about stocks, despite a few odd threads on Reddit popping up. So this $50 rally is still only minor whisperings and doesn't seem to have the movement play that other big short squeeze rallies have had by the retail scene in recent times. So to finish off, I'm not that optimistic on Xela rallying as high as $50. I do think the stock can rally on the grounds that the buyback will increase the underlying value of remaining shares and the fact that the company is increasingly emerging as one that is a leader in this area of business process automation, a sector which is actually growing quite fast. And Xela is only scratching about $1 billion out of what they see as a potential $200 billion sector. If the retail scene galvanizes, I think they could push the stock to about the $10 mark after February 24th. However, I think that is the best case scenario. I am still personally targeting a $4 sale of Xela at this stage, but as always, as more news comes to the fore, I may change my strategy around this stock. Anyway, what do you guys think? Is $50 an achievable target if a short squeeze rally does indeed take off with Exela Technologies? Or do you think it is a bit too ambitious of a target? Let me know your thoughts in the comments below. Until next time everyone, may the markets trade in your favour. Cheers.